Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar bearish sentiment has increased dramatically since the post-FOMC rate decision yesterday, as renewed selling increases along with weaker commodity prices has strengthened the decline. In early hours of yesterday, the Federal Reserve announced its 25 basis point rate cut. This in turn saw the bulls briefly challenge the top side, and as you can see from the rejection of the 60-day moving average at 73.14, which also was the high, the market plummeted and now takes out the support of 72.25 after posting a 7-day low of 72.04. Now, with the support crushed at 72.25, it does expose the next region of 71.65 to 70.95. If in the event we do see a turnaround in the market, any advances towards 72.40, 60 should be an opportunity to sell, and I believe the market is now destined for a further fall into this coming session and next week. The euro finally confirms the bearish outside range day. As you can see here, the market plummeted through the 116.90 level and takes out further supports and also confirms this bearish outside range day, and also a long-legged doji. Now, from the break, does expose the region of 115.20 as the objective, and I do expect to see further weakness as the US dollar increases. As I mentioned, the Fed now, for the third interest rate rise for this year, has now put the fourth possibly in December. Also, along the reports from the statement is that Fed Chairman Powell stated he doesn't see inflation surprisingly to the upside, noting it's not in our forecast. With the recent events occurring in the last 24 hours and with the September hike now in place, should put further emphasis on the US dollar to see a rally on towards 94.95, and I do expect to see the target of 115.20.30 be reached before profit taking emerges. The dollar yen is pushed higher and now trading at 113.55, where the resistance is. I believe the market will set a bull trap here, and it is expected to see the market turn away and plummet. I also expect to see further weaker price action coming through and look back towards the region of 112.65. Along with this, the yen crosses also support this, and there also is some divergence here as this rally climbs, so I do expect to see a rejection very, very soon. The pound again rejects the level around 132.60 and plummets back to the downside and now looks at 130.60. A break beneath there would give further exposure to the downside and look towards a safety net that holds at 128.40.80, which is where I believe the market will eventually reach and reassess from there. Any advances see the resistance at this stage around 131.25 to 131.80. The gold finally takes on the challenge to the downside and crushes the support of 1,189 and now exposes the region of 1,176. Reassess from there, as I do expect to see demand come back from that level and possibly see a rebound, but a little bit of caution because the market is now anticipating a December rate hike could put a little bit more emphasis on the downside. So reassess from 76. I'm not saying it's a buy, but I do expect to see a little bit of demand coming back from that region. And to round off with oil is that the market still loiters underneath the 73 region. At present, I still believe the market will foul towards this area and look towards the downside that comes in at 70.80 as an objective. So therefore, 73.15.35 should still pose as a supply zone. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day and the great start to the new weekend.